Hey, what's up, Bob Mortgage Nation? We are live. We are live. I appreciate everybody jumping on and checking out the show. We are on Instagram, YouTube, Facebook, LinkedIn. So hopefully you guys have all found us and connected with us. We appreciate you giving us the most valuable thing you have to give, which is your time. We hope to be students of that and be very, very respectful and bring to you some amazing content that's going to help impact your life and move you forward. I am joined today by Tiffany Gudger with eXp Realty out of Nashville, Tennessee. Tiffany, what's up?
Hey Bob, how's it going? Good morning.
Good morning to you. Good morning. It's great to see you
You too.
live
Yeah.
on the show here. I know that we're a little far away from each other. I don't know how many
Mhm.
I don't know how many miles it is from Dallas to Nashville, but I can tell you this: it's a short flight, and we had such an awesome time there in Nashville a couple weeks ago, and obviously getting to meet you. So thank you for that.
Yeah, thank you for having me. It was awesome to meet you and get the start talking about working together and all that kind of fun stuff.
Yeah, absolutely. I love the backdrop there. I mean, it's very Nashville Pro. You got, oh my gosh, is that a mixing table and
Yeah,
everything
yeah,
back there?
yeah. So my long-term boyfriend he is in the country music world, and he works with someone I think you might know actually. So
Yeah.
this is my real estate office and his studio kind of all put together.
Well, it looks very professional. So you get to do a little real estate, listen to some music, or him mixing it up, right?
Yeah, that's right. That's right.
Cool. Well, yeah. So who Tiffany speaking of is Tracker. So at Tracker, he's my brother in the music
Mhm.
world, and that's how obviously we connected. And one of the reasons why, not the only reason why, but one of the
Mhm.
main reasons why we launched a business in Tennessee. So we're super excited to be there. Super excited to be working with you. Tell the people. I mean, we're different audiences. You know, I have mine. You have obviously yours. You have an amazing um, footprint there in Nashville as far as welcoming people. So tell a little bit about you and how they connect with you on social media, and just the things that you're doing out there to make sure people understand how great it is to work and live in Tennessee.
Yeah, so I have my own YouTube channel. I just started this year that I'm pretty excited about. It's all about living, eating, breathing, sleeping, playing, working, all the things in Nashville. You can find that. It's called Living in Nashville with Tiffany Gudger on YouTube. I'm on Instagram, Facebook, all that kind of stuff, just to share with you guys kind of what it's like to be here. Because I feel like that's the questions I get the most. It's not, oh, Tiffany, when you do house tours, I want to see what the houses look like. It's what is it like to live there? What do we got going on? What kind of places can we visit? What are the people like? What are the atmosphere? What can we do? And so I've kind of taken that and put that into my YouTube channel that we get rolling with a new video every week, and
Hmm.
we cover the different suburbs in Nashville and that kind of stuff. So I work a lot with both people that live here already and people moving here because I am a transplant here myself. I've lived here for going on 6 years. So I know what it takes to move here and to buy a house here and figure out what area you want to be in. So I
Right.
figured I would share that with the world.
I love that. I mean, it is. I mean, it's the experience. I mean, what you're delivering to people through the social channel is their ability to connect with you and for you to be able to deliver the type of experience they could potentially have by, let's say, moving to Nashville and working there.
Mhm.
And that, I mean, that's so important. It's not just about the house, right? And so they want to know what's around the house, what's around in the community, what are schools like, what's the entertainment value there. Obviously, big. What's the investment in Nashville? Am I buying this as a primary or am I looking at it as a rental? Because I know that's a very hot rental market as well. So many different things that we can obviously talk about in today's show, but I know that you put out a lot of that content, which is so helpful for
Mhm.
people to engage with you and get to know that amazing city and state and community. So cool, man. I know you had a lot of questions set up, so let's get to that, and then obviously we just ping pong it back and forth.
Yeah, absolutely. I have some questions I would love for you to answer for me today because, I get a lot of questions about the mortgage and the lending side for my clients.
Okay.
Once I help them with, the area they want to be in and what Nashville's like, everybody wants to know um, kind of where to get started and stuff. So, first of all, I want to talk a little bit. Maybe you could introduce you, who you are, your company,
Yeah.
what you're doing here in Nashville, and that kind of stuff, so they can kind of understand a little bit about you and what you bring to the table.
Yeah, well, no, I appreciate that. Yeah, so guys, for those that are not part of my audience, I'm Bob Johnson. I own a company called BobMortgage. It's a brand that we had for a very long time, the BobMortgage brand, and we turned it into a business. Been in business for 25 years. Been very blessed to provide financing to over 25,000, 26,000 now families over that period of time. So a lot of opportunities to talk to a lot of people, but then also help a lot of people and hopefully, look at that as an opportunity to change and impact our lives positively because we know real estate is one, the single largest financial transaction people make in their lifetime, but it's also the best way to generate wealth in this country. It is something that has impacted my life. I remember the first time I bought a house, 25 years ago. It was a little $60,000 home, and I couldn't even afford it. I mean, I couldn't. I just got in the business and realized that, well, I didn't have 2 years of self-employment income, and oh my gosh, you need money to buy a house, and I had none. But we knew how important it was. My wife and I did. We were getting married in December. We were buying our first house in December, and I had just got in the business in September. And we just said, look, I'm gonna, put the ego aside, get a cosigner. Let's ask her grandparents to cosign. They did that, and they actually the ones that gave us money to even get married. And so we just decided to use that money to buy our first house. And elope and we went to Jamaica and got married. But we knew how important homeownership was, and that changed our lives and put us on a trajectory that was much bigger than even what we could have imagined from the very beginning. That little $60,000 home turned into 12 homes and rental properties and all that kind of stuff down the road, but it just took that one little single investment. So I feel like that's something that I have a responsibility and obligation to after now 25 years. And we started this a long time ago, but it's something we continue is educating consumers. We use our social channels. You can find us online at just our Bob Mortgage. I mean, that's pretty simple on all the channels, even TikTok. My media company's got me into TikTok, so checking all that stuff out. But it's about educating and helping people understand how easy it is to buy a home, or just really getting rid of the misconceptions of home ownership, and that you don't need certain things, credit scores or down payments. You don't need certain types of limitations put on you that maybe were in the past when your parents bought, and stuff like that. So we spend a lot of time educating, which continues to drive a brand awareness. And we are very fortunate and blessed to have a lot of people that reach out to us at bobmortgage.com to apply for a home loan. And Nashville was important to us. To getting into Tennessee was super important. We're a Texas-based mortgage company for the last 25 years, but we also have operations in Florida, Tennessee, soon to be California, and Oklahoma. And it's just being able to reach enough people that we can positively impact. And for Tennessee in general, my brother lives there in the music industry. He's been there for a while, and it gives me an opportunity to connect with him at a deeper level because we travel out there now more extensively than what we had in the past. So it gives me a good reason to do that. But then just really looking at that market in general. I mean, Tennessee market's crazy. I mean, it's like the fourth best real estate market in the country. I mean, the job growth is amazing, right? I mean, you're having the influx of people that are coming in. Your population is going to grow. I think I saw a stat by like 50%. So I mean, you're growing, right? It's continuously getting bigger. The Gen Pop age, 20 to 49 is what we're looking at in the younger generational people in Nashville, which means you have a lot of people that are renting, but they're going to be moving up to buyers at some point here pretty soon. So there's a lot of room for growth. Investors are looking at that because it's a great rental market. So when I look to go into markets, I want to know, is there one, I have a personal connection with my brother, but two, looking at this and saying, is there an opportunity for me to really positively impact a lot of people's lives by going and entering into a market? And that's what we chose to do.
Yeah, I think the opportunity here with people moving here, at one point it was 100 people every day
Yeah.
moving here, and it is a lot of younger populations looking for that first time property, and that's who needs, I think, the education the most. And so I think this is a great opportunity for you and for me and your company. So I think you made a great decision.
Well, I appreciate that.
Personally,
I appreciate that.
yeah.
Well, go at it. Go ahead, and I know you had questions for the audience and stuff like that. So go ahead and let's knock it out.
Yeah, so maybe let's just start with one of the biggest questions I get is interest rates. Like everybody's seeing, oh, well, there's record low interest rates. So maybe you could talk a little bit about that, what it looks like. Do you think that's changing? Are they going up again? Or
Yeah. So interest rates. I mean, guys, let's just start here. Okay. If you're renting, what is your interest rate? It's 100%. So your interest rate is 100%. So my bar is already way up here because interest rates are lower than 100%. Okay, so we've been in an amazing run. I mean, obviously we had the run started with the pandemic and everything that happened last year, and we saw rates significantly drop. And we had, 30-year fixed at one time. I got a 30-year fixed at 1.99. I mean, we were getting pretty low, and it's been running that way for some time, and then it started to trend up once we started to get out of some of the concerns with COVID and whatnot, and people going back to work and businesses opening up. And so when you saw that happen, we started to see interest rates that were in the twos, two and a quarter, start trending up to two and a half. And some loan programs actually went up to 3%. And it's funny, when I saw 3% and we were talking to some buyers about that, they're like, well, interest rate's too high right now. And I'm like, so you're telling me you're going to wait for interest rates to go down, but you're willing to pay 100% because you're renting. And I'm like, let's talk about the cost of waiting, guys. And we went into that question about, that conversation about cost of waiting, what the house is going to cost you, in 6 months or a year because of the appreciation the market's experiencing right now. And interest rates aren't going to be going down. The Fed is working hard to keep them low and counterbalancing inflation talks and things of that nature. But realistically, guys, in a healthy market, I mean, we're not going to be rates in the twos in a healthy market. We should start to see rates trend, into a solid 3.75, 3.375 to 3.75, kind of in that range where we were pre-pandemic, right? That's where we typically were pre-pandemic for some time. I'm not saying it's going to happen today. It's not necessarily looking to happen possibly even in 2021, but the trend will go where interest rates are going up. But at the end of the day, when you look at it decade by decade, when rates have gone from sixes, sevens, eights, 18%, we're still in historic numbers. And that means the buyers' monies are going further with their house payments, right? They have more money to spend on the house, and they have more money left over to spend on other things because interest rates are so low.
right, yeah, and I think that's something that a lot of times buyers forget is it's 100% when you're renting. So I mean, at that point, anything's going to be better, right? Uh,
Right.
so that being said, I think probably some of my next questions
Okay.
is people want to know, well, I don't have the money to for the down payment. I don't have 20%, or I don't have 10% for the down payment. So um, maybe talk to us a little bit about how much do buyers need for a down payment?
Yeah, Tiffany, that's a great question, and I actually get that a lot. And I talk to people. I'm like, where did you hear that? And it's one of two places. I mean, they basically just Google search it. How much money do you need for down payment? They find something that says 20%, or they're kind of like looking on some websites and they see these payments, and it's directly tied to a 20% down payment, or they've heard it from family. Back in the day when they bought a house, they had to have 20% down to buy a house, right? That's what they told them. So, of course, if they had to do it, why not, do it for the kids? But the reality is, guys, you don't need 20% down to buy a house. There's several different ways to structure financing in this marketplace today. So let's talk about basically let's go with a couple different options. So VA. So for our veterans out there, Veterans, you guys have a zero down program, so no down payment,
Mhm.
and then for the most part, we structure it to where we pay all the closing costs. So we have a lot of our veterans getting in with really no money out of pocket. Some of them even getting the earnest money back that they put down when they put a contract on a house. They're even getting their earnest money back. Our veterans are finding great ways to be able to buy a home. VA is one of the best ways to finance. I wish we could just give the first house to a veteran for sure, but got to finance it through VA, and it's still one of the best ways to go, especially those that are in a position where they receive disability income and they have a disability rating. Then that means they get to waive their funding fee and stuff like that. So there's definitely some advantages that go along with that. USDA is where you're buying typically outside of certain city limits. There's a map at the USDA website that kind of gives us a guideline as to homes and when we put in an address. And it tells us if they're qualified, but those also are zero down programs. Now, FHA is a great product, and for first time home buyers, really for any buyer, but that's looking for a minimum down payment. It's 3.5% down. And then conventional financing is as little as 3% down if you're a first-time home buyer. So, and a first-time home buyer is considered somebody that hasn't owned a home in the last 3 years. So no ownership in a house in the last 3 years. So it does, you do not have uh, to to put 20% down. So the thing there is, mortgage insurance, people talk about that, and that's why they typically assume they have to put 20% down to avoid mortgage insurance. And there's several different ways that on a conventional loan, we could get you out of mortgage insurance, right? Um, you can buy it out with a one-time fee. So typically you pay it monthly, or you can buy it out with a one-time fee, and that's at a discounted cost. I, as the lender, can pay the mortgage insurance for you the same way that you could if you didn't want to pay it. But that changes the interest rate a bit because I have to finance that in. Or you can roll it into your loan. You can say, hey, I don't necessarily want to pay it up front, but instead of doing a 5% down payment or a 10% down payment, I'll just do 10% and not pay mortgage insurance. I'll just roll it into to my loan over a 30-year period. So they're able to do that as well. So a lot of different ways to structure mortgage insurance today that wasn't available, let's say when your parents bought the house. And so we just really talk to the client, find out what they're really needing, figure out where they are financially, what's going to be the best strategy to get them into the home for their payments and for their out-of-pocket expense. And then we just show them an analysis to make sure that they understand, short-term, long-term benefits, and see which is the best way to go.
Okay, and yeah, that kind of rolls me into the next question I was going to ask you is there's so many options. Um, and people think they need certain credit scores and things like that. So with the credit score, what let me just ask you as if I was a buyer. Okay, what credit score do I need for a loan, and how do you determine which loan is going to be the best one for me? Because there's so many options. How do I know where to go and who to ask and which kind of lender to talk to and that kind of stuff?
Yeah, well, so the credit scores, there's three things that we focus on, right? When we have an initial conversation with a client, we're talking to them about three items. It's credit, it's cash, and it's capacity. We lead with credit because every loan is really looking at the credit score. Now, let's first talk about what's credit score, right? So, as consumers, most individuals look at it and they say, well, I saw my credit score on like freecreditreport.com or on one of their credit card companies, which is great. Those are great places to monitor credit to make sure that there's nothing on there that shouldn't be on there. However, their score is going to be different than what a mortgage lender pulls. Okay, just a different algorithm that's being utilized, a scoring model. So mortgage companies typically end up being a little bit lower than the score that they see. Okay, so that's first off. Secondly, the score that we use is not an average. Most people think we just average the credit score, but we don't. A lender is required to throw out the high score, the low score, and use the middle credit score. We don't care which bureau it's with because you have three, one with Equifax, one with TransUnion, and one with Experian. We throw out the high, throw out the low, and we use the middle. Now, Tiffany, if you and I are buying a house, let's say we're married, we're buying a house together, which credit score do we use? We actually would use the lowest of mine and yours mid score. So if you're at a 780 and I'm at a 620, well, we're going to have to use the 620 for qualifying. So, guys, girls, when you pick your partner, make sure they got good credit.
Yeah.
But no, I mean that's what happens, right? I mean that's part of the model and how we have to do the credit side. So once we've identified that, then we look at okay and say what programs are good with certain credit scores. So let's talk about conventional first. So conventional needs a minimum of a 620 credit score. So if I'm buying the house by myself, as long as I have a mid credit score of 620 or higher, we're good. From a credit standpoint, remember there's three items we focus on: credit, cash, and capacity. So the credit side, we can check the box. Now, if you and I are buying the house together, we just have to make sure the lowest mid score between you and I is above 620, okay? Because that's the one we're going off of. Now, FHA actually has a couple of different ways to do it. They have the first level is 620 or higher. Okay, that would get you a 3.5% down at 620 or higher, meaning the better interest rates. Okay, then they get us a little slightly worse, not bad, right? You remember we're talking about twos and threes and interest rates, so there's tiers. So FHA will allow you to go to a 580 with 3.5% down. So 580 mid credit score is 3.5% down. Okay. Now let's say somebody has a 560 or 540 or 520. FHA actually will allow us to go down that low on a mid credit score, but here's the kicker. They have to put down a minimum of 10%. Okay. So when we run these loans, or when we do a pre-qualification and pre-approval, we run these loans through an automated underwriting system, okay, where we build the profile of the client, income, assets, credit. We get all that information into our system and we put it through the automated underwriting engine. And that system will deliver us one of two things: an approve eligible or a refer with caution. Now, if we get a refer with caution, can't do it, right? It's telling us we cannot do that loan because it doesn't meet the guidelines. But if we get an approve eligible, then we're good to go. So as long as you're at a 520 credit score and we're putting at least 10% down or more, right? Then we get an approve eligible, we're good to go, and we actually have a loan that can work. So again, definitely don't need perfect credit. Okay, VA would be the same way. They 620, just like FHA, 620 and higher, kind of one tier, but they will go down to 520 as well, as long as we can generate an automated approval with no money down, right? So it's just really more about the automated approval with VA process than anything. And then USDA, a little firmer, 640 and above. They want to they just they have a different set of guidelines. They don't play by the rules that FHA or VA, let's say, would, or conventional for that matter. They just want a 640 and above credit score. VA will even allow for manual underwriting underneath a 620. So meaning if we don't get the automated underwriting approval, we can actually have an underwriter put their eyes on it, and for us to basically tell the story of why this what happened, what they did to fix it, why it's not going to happen again if there's a credit related issue, and then we can actually put that in front of an underwriter and show them that this veteran should be in a home, and then they can make that decision.
Yeah, so I know that's a lot lower than most people think that they need to be able to buy a home. So a lot of people are even more ready than I've come to notice.
Yeah. Yeah, most people think you have to have now 700 credit scores or higher to buy a house, and we've seen the trend. I mean, credit scores have been rising substantially since the last housing crisis. I think it's people have really identified that credit is important, so they've really started to work on credit. They've started to fix their credit. And remember, guys, credit is just a snapshot in time, right? When I pull it, so you need to understand how to maneuver around your score to deliver the best score when you're applying for a loan. So for instance, let's say you have a credit card if credit's looked at a couple of different ways, but it's utilization rate. That's a big one. So if you have a credit card that has a max credit limit of 1,000 and you use it periodically throughout the month, and let's say um, you know eh, when the credit card company reports to the credit reporting agencies that your balance is $1,000, that looks like you have a very high utilization rate and you're at risk. But the reality is, the day after they reported, you paid it down to $250. Well, they didn't know that. So when I pull the credit report picture and snapshot, I'm seeing $1,000 because that's what they just reported. So you look like you're high risk, which drives down the score. But in reality, if you would call the credit reporting or credit card company to find out when they report, then all you have to do is make sure that your payment's cleared before they report. So that way, when they go to the credit agencies and credit bureaus, well, now you look like you're at 250. So you're low risk, which bumps up the credit score. And so it's a game. Same thing with collection accounts. The collection accounts that you have, if you have them, it's always important to pay them. But the reality is, paying a collection isn't going to positively impact the score as quickly as possible. It's going to take a longer period of time for that score to go up. So call the creditor that holds the collection account and ask them for a paid for deletion, where you just basically say, look, I'd really like to be able to pay the debt off, but I would really love for you to be able to delete it off my credit report. Would you be willing to do that? And I pay you, and then you send a notification to the 3 credit bureaus that the account needs to be deleted. That almost immediately increases the credit score. We've seen that change at 20, 40 points, depending on how many collections they're able to do that with. So a lot of different strategies that we talk to clients about.
Yeah, and that was another question I kind of had for you anyway. Was, say my credit's not where it should be. Can you raise my credit score for me? And I know that you can't per se, but there are options where you could maybe do like an analysis for people and help them figure out what's going to be the best course of action, or how do you handle that?
Yeah, just exactly that. You're 100% correct. We would do what's called a what if analysis, and that's what kind of like the thing I just talked about. That what if analysis is going to tell me that, hey, if you delete these 3 collection accounts, your credit score is going to go up. Or if you pay down the balance on these 2 cards to $250, or let's say a 25% utilization rate, then your credit score is going to go up. So it's giving us a roadmap, and then what we do is we deliver that what if analysis to the client and say, look, here's your roadmap to getting that score from a 580 to a 660, and that could be a game changer for you when it comes to our ability to cover all your closing costs, or your ability to get a lower interest rate to drive a lower payment. So there's that conversation that we're having with clients, but there's also another harder conversation, and it's those that need to break a habit. All right, and I do talk to clients like, look, you're at a 520, so the only thing I can tell you is this: you need to break a habit, and the habit is you're not paying your bills on time, or you just haven't been paying bills at all. Because when I look at a credit report and I'm seeing late payment after late payment after late payment after late payment, that tells me you're paying them, but you're just paying them late. So we need to break a habit, and you need to start paying them on time, and that will change your credit score. Now, that could take a year. So are you willing to commit to that? How big is your why to owning a home? If the why is big enough, they will go through that process to change their life. The same thing with the collection accounts. You're going to have to work hard to get those collection accounts paid off, or get them deleted. I mean, it's going to take some time. Are you willing to put that first step in front of you and continue down that path to change your life? And some people aren't. Some people are just they're like, it's just too hard. I'll keep renting. And I get it, but they need to have that. They need to have somebody to talk to them about it like that, and that's what we ultimately do.
Yeah, and I think that's one of the things that, as I've gotten to know you and talked to you a little bit, that really stood out about you personally is you care about these people like as individuals too, and people, and you want to get to know them on their personal levels and say, this is how I can help you. But there comes a point when you can only push them and help them and go so far before someone has to help themselves, right? So it's nice to have a lender that will talk to them that way on a personal level. They're not just another person in their client bank. Oh, well, they're not going to work with us, they don't qualify, and we just kind of shoo them away. Because that's not how I run my business. It's not how you run your business. I think that's
Yeah.
super important to mention on how you stand out.
Well, I appreciate that. Yeah, I mean I mean we're very similar in that approach, and I think it's because we like to play the long game.
Mhm.
And the long game meaning I want them in my ecosystem. I
Mhm.
want them connected with me from a marketing standpoint. I want them to like my videos. I want them to be part of our community. I want them to join my text community line at 214-214-4246, and that allows me to connect with them on a very personal level, not just about the mortgage side, but about life. I use that to talk about the challenges and the struggles and the successes we've had, and just different things like that, and hopefully that resonates at some way, some point with them, helps them change their life, and you know what, maybe they do a loan with me, maybe they don't, but they could change their life, they could actually refer other people to us. And so that's why you take time with people, and it may not be an hour, it may be 5 minutes, but that 5 minutes needs to be as impactful as it can be.
Mhm. Yeah, absolutely. I 100% agree, and like to align my business with the same kind of thoughts that you have as far as that is concerned. Okay, so that being said, say I know what my credit score is. I've kind of got an idea. I let you know how much money I have in the bank. Um, now what? Like, what's the process? Like, how do I? I've got a realtor. She sent me over to you. Tiffany said you're awesome. Um, what do I do?
Yeah, so that mean great, great transition. So really, um, we're gonna have an initial call, right? Whether it's with me or it's with one of my team members. It's basically that initial call, which is going to be, let's understand what you're wanting to accomplish, right? So, um, we have a 10 to 15-minute conversation around credit, cash, and capacity. I need to understand where their credit is. I need to understand how much cash they have available to do what they want to do. And I need to understand capacity. And capacity is basically the way we document one's ability to repay the loan.
Mhm.
Okay. We didn't know where do they work? Are they hourly, salary? Are they commission? Are they self-employed? So how can we document your ability to repay? And so those three things frame up the type of loan that we're looking to make recommendations on, right? So we start that conversation, and then the next thing we have to get them to do is make application.
Mhm.
I mean, it's a great conversation, but now it's the next step is, okay, I'm going to send you a link to my website, bobmortgage.com, and you're going to go in there and you're going to complete about a 15 to 20-minute application, right? It's going to ask you questions like where you work and where you live for the last 2 years, income, assets, credit, and that all that data is going to come over to us, and then we're going to look at that from a pre-qualification standpoint. But also, my system is really smart. It's going to actually send you an email that says, "Hey, congratulations! Thanks so much for applying. Here, click on the link because now I need you to upload all the documents that we're going to need securely, right? Upload these in a secure website portal for us to be able to validate everything that you put in is accurate, because there's a difference between pre-qualification and pre-approval.
Mhm.
So that validation of the items is the pre-approval process, and we go through that. We document all that. We pre-underwrite the file up front, and now we know based on what they're wanting to do whether we are going FHA, conventional, VA. We know that we can get that loan done. And so then it comes down to the next phase, which is having a call with them about um, financing options, right? So I use a tool, mortgage coach analysis tool, that allows me to break out 2, 3, 4 different options for them to review side by side, so that a way I can make the best recommendation for them on which loan I would choose if it were me. And a lot of it's predetermined based on a simple question: how long do you plan on keeping the house? Because the keeping the house part helps me understand the cost of ownership. And my job is to make sure that we provide the lowest cost of ownership for the clients, right? And people look at it for 30 years. Well, look, if this is going to be a 5, 7 year deal, let's look at which type of structure would I recommend over a 7 to 15 year plan, right? Which one's going to drive the lowest ownership cost? And that's what we do. We lay them out side by side, make a recommendation, and let the buyer choose which one they like. And all that, I mean, honestly, all that could take 2 to 3 days. And then we get the pre-approval letter done, get it over to you, Tiffany, and then
Mhm.
you're out showing a house. Because we understand that, like, if you get us a buyer on a Monday or Tuesday, by Friday we got to have that letter ready to go. because you're going to be looking at houses on the weekend, and they're going to find the
Mhm.
perfect house, and they're going to want to make an offer, and we got to have that all that stuff dialed in.
Oh yeah, and like in today's market, Nashville, like you said, one of the craziest markets in the country, and it's just astronomical the things that you need to do to kind of make yourself um, take a step above maybe some of the other applicants. So all sellers anymore are requiring a like pre-qualification. They have to know that you have talked to a lender, that you're pre-qualified, and even a step further is when I can show the sellers that my buyer's actually pre-approved. And so, like you said, there's a difference in pre-qualification and pre-approval. So what does that mean for my clients? So it makes them look better to the sellers, but can you explain a little bit as to why?
Yeah, so I mean, it's basically it's a trust and verify, right? So I trust what you put in the system. That's a
Mm-hmm.
pre-qualification. I'm
Mm-hmm.
just looking at what you told me. Some people say they make $100,000 a year, $1 million a year, whatever, and I'm going to trust that. But the verification process is when you actually supply me the bank statements, the pay stubs, the W-2s, the tax returns, for us to look at all that and say, yep, you actually do make that. Because honestly, I've seen some people fat finger a zero, right? And instead of a million, it's 100,000. It happens, right?
Mm-hmm.
Instead of 100,000, it's less, it's 10,000, right? So
Mm-hmm.
we have to make sure that we're validating all of that to give the pre-approval. But for us, then we actually we'll pre-underwrite that loan. I mean, we take it even another step further. So depending on the markets, depending on the time period the buyer has before they're buying and stuff like that, we actually go ahead and get it through underwriting, and we'll do a full underwrite even before the client is under contract, because in this market, and we've been doing that long before this market's been what it is. It's just something that I've always believed in. But in this market especially, I mean, for me to be able to call the listing agent when you make an offer, and to say, hey Jim, I just want to let you know that Tiffany's buyer, they're not just pre-qualified or pre-approved. We've actually put them through underwriting. They've already been underwritten before they went under contract. So the financing, addendum that says, 14 days for buyer approval. I mean, yeah, Tiffany put 0 days. Yeah, that's because they're already approved. We're good to go. We just now need to make sure the house is prepared and ready so we can get it, do an appraisal or whatever we're going to do. And that just makes you stand out that much more over the other offers that have been submitted. Our job, Tiffany and I's job, is to position your offer at the top of the list. And we have a lot of different ways to do that. But one of them is to have you fully vetted, fully approved prior to that offer going in.
Yeah, and I think that's super important to touch on. In this market, obviously, everybody's concerned about dollar amounts and paying the most for a house. That's they think that that's going to necessarily get them the deal, but there are other things that we can do other than spending more money to help get these buyers into these houses. And having something pre-underwritten is not heard of very often. And so sellers get very excited because a lot of things can change or quote unquote go wrong in an underwriting situation where they start requiring things and pushing closing dates back and all of that stuff. So I think being able to offer that is something really, really important.
Yeah,
Um,
time kills deals, speed wins.
mhm.
I mean, it really does. And that's not just in our industry, it's in a lot of industries. Time kills deals, speed wins. So the quicker we can get the money in the seller's hands, the better chance we have of getting the offer accepted. Right? So if somebody's coming in and saying, I need 30 days to close, and I can come in and say, I can get it done in 18 days, they're like, oh, heck, I'll take the 18 days because they're already approved. Right? I
Mhm.
mean, that's speed, and that's what typically allows us to win.
Right. Um, and I guess kind of a final thing, another issue I had or question is people are kind of saying, well, maybe I should wait. The market's so crazy right now. Um, there's so many houses for sale. There's a lot of people in forbearance at this point, still haven't started repaying from, having to deal with the pandemic last year. And they're going to have to start paying soon. They're going to go into foreclosure. There's going to be a ton of foreclosures hit the market. Um, so I'm just going to wait for that. What kind of response do you have for buyers that are thinking in that terms?
I mean, that's a big question because there's a lot of layers in that
Hmm.
question, because the cost of waiting, you typically end up without question paying more if you wait than if you pull the trigger today.
Mhm.
Okay, because you have one, you have interest rate increases. We know that interest rates, we're not expecting them at all to go down, so we're fully expecting them to go up. So you could have a half a point, three-quarters of a point bump in rate, and you factor that in over a 15-year period or 10-year period, depending on how long you keep the house. That's tens of thousands of dollars.
Mhm.
Then you have just the fact that you were looking at a $300,000 house today, and now you got to pay 350 for it in a year or what have you. I mean, there's another 50. So I mean, it starts to add up in that part. Not only do you have to pay more for the house, then you have your down payment increases because your down payment is a percentage of the sales price. So all those layers end up costing the client quite a bit more money when they wait. Okay. Um, Now let's address the fact of this forbearance part that you mentioned,
Mhm.
because yeah, you're correct. I mean, there's 1.8 million or whatever homes in forbearance across the
Mhm.
United States right now. Um, you know, the banks are they don't want them to be foreclosed on. They,
Mhm.
they really don't. These servicing companies, banks don't want homes to be foreclosed on because it costs so much money to foreclose on someone, right? And so they're going to try to find ways to work that forbearance out to keep people in the house, whether that's restructuring the loan, talking about putting out a longer amortization. Instead of 30 years, go to 40 years. I mean, there's a lot of different things that people are talking about. How do we keep these people in the home? But the reality is, some people just can't. They're
Mhm.
not going to be able to keep the house, and they are going to go into foreclosure. Now, what percentage? Not sure of what that is yet. We'll start to figure that part out. But the reality is that's going to, um, unfortunately, I mean, when they go into foreclosure, it's going to benefit a lot of people because you're going to have a large number of homes go back on the market. So right now, we're in the U.S., right? We're sitting at roughly 3 months of inventory, which is low, right? I mean, I know our markets are you know, we're under a month of
Oh
inventory,
yeah.
right? I mean, so
Oh
so our markets are even lower than the 3 month average. We're under a month of inventory. So, but a healthy market is 6 months
yeah. Mhm.
of inventory, and the only way we're going to get it because new builds right now aren't going to get us there because builders aren't building as many homes today based on the cost of lumber and things of that and land and that starts has have slowed down. So the thing that's going to have to get us there with inventory is going to be these forbearances that trigger foreclosures,
Mhm.
because that could put a significant amount of homes back on the market for our younger buyers and whatnot to be able to snatch those up. Because I mean, I think that's going to be something that comes out positive as we move into 2022 and beyond.
Yeah, and I think so too. I will say, kind of in this market, what's pushing it to be so crazy and the things that are selling is, those first time home buyers or people that are buying their first home and in that kind of lower price point. Obviously, the higher the price point goes, the longer we're seeing homes sit on the market. And that kind of pushes to, well, if you're a first time home buyer, things might be a little crazier. If you're in a starter home, but you want to upgrade and you're looking to upgrade, I think it's going to be easier for you to get in a home because a lot of people are worrying that, um, yeah, I can sell right now and make a bunch of money and have all that equity, but can I replace it? And I'm not here to tell everybody that they need to sell and buy right now. It's very situational based. Every situation's different. Just like you say, you look at each client individually and make sure they're doing the right thing. I think it's something where you and I come together and don't just swoop somebody into a generic form or a process and see if it makes sense. Some people it doesn't make sense to sell and buy right now, but some people, it does because waiting could be tragic, in their financial situation. So I think it's important to note it's different for everybody, and you're not going to know unless you come and talk to us. So,
Yeah, no, I love that. I mean, that was some of the things we talked about when I was in Nashville, and I appreciate you bringing that up because, that is a unique selling proposition for you, a value proposition as to why people should reach out to you and connect with you as a real estate professional, because you're not looking to say, oh, it's a great market, let's just sell, 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 sell. We get the most money for your house. Well, yeah, that's good, but is that the best thing for them, right? And people need to understand their why. Like we talk about their why for buying, what's their why for selling,
Mhm.
right? Sometimes it is. I mean, they have situational circumstances that they're of a certain age, they need to exit that house, and now's the best time to do it because they can get the most money, and then they're going to transition into another type of housing facility, right? Because they may be older in nature, so they this is the perfect time to do stuff like that, right? But then you have others that look at it and say, hey, I'm going to get the top dollar, and then I'm going to sit on the sidelines and wait till these forbearances happen. Great,
Mhm.
because they know what they're doing. They're going to get top dollar. They're going to hold that money. They may invest the money, do other things for the next 6, 8, 12 months, and then they're going to become a buyer in that market if they feel like they're going to be able to pick up a home that came from a forbearance into a foreclosure. So a lot of different ways to do it, but you're actually the one having the conversation with them, and I think that's pure value right there.
Yeah, you know it as well as I do. You take care of your clients and you treat them right. They'll take care of you. They'll stick around. They'll come back and it'll repay you in the long run. And it's how we run our business. So
So guys, hey, if you're out there in the Tennessee market, in the Tennessee area, how do they get a hold of you? So what's the best way, Tiffany, for whether it's even people in my market that's looking to buy an investment property in the Music City? How do they go about doing that? How do they find you?
yeah, so you can just shoot me a quick email. It's tiffany.gudger@exp.com. Tell me a little bit about your situation. We'll set up a call. If you don't have a lender yet, we'll set one up with Bob, and we will kind of go from there. I like to hear a little bit about what you're looking for, and I can help you kind of point you in the right direction. But the best thing you can do is to visit. I tell all my clients that sometimes we don't get to, and we do, you know, Zoom or FaceTime tours of a house if you just need something quick. But the best thing about this area is that there's something for everybody. So we'll get together. We'll figure out what you're looking for. You can give me a call. 828-545-9933 is my personal cell phone number. I have a different one for my local Nashville YouTube channel stuff, but that's my personal one for all you guys watching out there right now. So yeah, reach out. Let me or Bob know if you have any other questions as well. If there's something we didn't go over today that you would like to hear about, we would love to get that answered for you.
Awesome. Well, look, I enjoyed. I mean, this one, it goes quick. I mean, this is a solid 48 minutes already,
Yeah.
and hopefully, guys, we've provided something to someone out there. I always, when I talk about like our shows and the things that we do and all the content that we put out, look, my goal is to change one person. Right. I mean, who knows how many, could be only be one person watching. I have no idea, but the goal is to change one, and then we've done our job. So hopefully, guys, that you've found value in this conversation with Tiffany and I, that hopefully we've been able to impact your life in a positive way. And yeah, if there's anything that you guys need, obviously reach out to Tiffany there. She can definitely point you in the right direction. You guys on my social channels, you know how to get a hold of me, BobMortgage.com. Pretty simple. It'll have all the contact information there. Just follow us on all the channels. And yeah, Tiffany, I really do appreciate you hanging in here and providing all this wonderful content. So thank you.
Yeah, of course. Thank you for having me. This is fun. And like you said, we could probably go on for a
Oh
long
yeah,
time, but
no,
we'll save that for next time.
we keep going, but I don't know if they want to listen to us. But yeah,
No,
we
no,
could.
they're probably
We'll
over it.
we'll do that. We'll do that again. And I look forward to being out there in Nashville. I know they're trying to get me on a call or not on a trip out there actually in June. So I don't know if that's going to come
Yeah,
together or not, but we'll be out there June, July, or August for sure. So
I'll be
look forward
here.
to seeing you again. All right, take care.
All right. Thanks, guys. Thanks for
All right.
watching. Fun.
Yep. Bye.